quite high and across all three business units. In bridges and culverts, our organic growth in the order intake is 27% in Q3. In geotechnical solutions, 7%. In stormwater solutions, 34%, and this is leading to an overall group organic growth of order intake of close to 18%. However, the geopolitical situation and the rising inflation has impacted our earnings in Q3, and they are behind last year. And looking at our bridges and culverts, the situation, including the inflation, of course, have led to short-term delays in our customers' financing solutions for infrastructure projects, which in turn has led to delayed deliveries from their side in their requests to us. On the geotechnical business unit, the macroeconomic disturbances have delayed our new plastic pipe production setup in Lithuania. And this has also then caused a less favorable sales mix for us during Q3. In addition, there was a certain pre-buy effect in Q2, where customers were speculating because of high or long lead times of materials. They were speculating in this and asking for more materials during Q2, which then led to a certain lower demand in Q3. In stormwater, we see effects of this as well, and this has led to delays in our private customers' construction projects, which has then, of course, impacted the leverage from the strategic initiatives to scale up this business unit, meaning that the volume wasn't there in Q3 to cover the fixed cost that we have to strategically develop this business unit. But what we can see during Q3 is a very strong cash generation versus Q2, and this is primarily led by a lower working capital situation than in Q2. So if we continue into what we see on the market and what the outlook is, as I now just said, we have of course been affected by the situation in the markets, and this has led to disruptions in our supply chain, long delivery times and shortages, as well as all-time high costs for raw materials. But during Q3, we can now see that the situation has clearly stabilized and much more manageable. I think the second bullet there is what I already mentioned, that the situation has caused delays in our customers' financing on their infrastructure projects. Although we see this as a more short-term disturbance, this could also have an impact on the stormwater solutions into Q4 and into the beginning of 2023, because here we have more private customers than earlier. Recent information we have, I think, proves also a certain stabilization for the stormwater solution business unit. And the strong order intake that we've had during Q3 will also impact us quite positively in 2023. So we enter into Q4 and into 2023 with a record high order book. Market-wise, we can see that the infrastructure market is continuing to grow throughout Europe. And in tough times, it is a classical area for governments and states to invest in to stimulate the economies. We saw this during the pandemic already, and we expect to see some of those effects into 2023 as well. And we see that we are taking market share also from the competing solutions, which are mainly concrete and plastics. And we base this partly also, of course, on our strong sustainability offering to our customers, and that gives us a clearly competitive advantage. So, Philip, should we get into some financials?
Let's do that, Stefan. If we start by looking at the third quarter in total for the group, we had a total growth in sales of 5.7%, of which 3.1% was organic growth in the third quarter. If we look at the order intake, as Stefan mentioned, it's been strong. We had an organic growth in the order intake of 15% in the third quarter. However, looking at the underlying EBITDA, we do see a decrease compared to same period last year of just below 19 million SEK. And it is very much linked to the disturbances in the geopolitical situation that we've talked about. I will go through the business units in a minute, and we can then see more where this come from. I think it's also worth mentioning that during the quarter, we've joined the Steel Zero initiative. We will talk more about that later in this presentation, but that's a very exciting and positive initiative. And also, during the quarter, we have finalized the divestment of the operations in Belarus. So that's behind us. It has meant some one-off costs, in total 10.2 million this year, 4.6 in the third quarter, which we report as a non-recurring item. If we look at the first 9 months of this year, we see a total growth of 12.9% in sales, of which 11.7 is organic growth. We also here see an increase, a strong increase in the order intake, totally a 19.5% compared to last year, and 17.6% of that growth is organic growth in the order intake. If we look at the underlying EBITDA, there is a decrease of 15 million SEK, and we will come back to that when we go through the business units. Also, after we closed the third quarter, we decided, or the extraordinary general meeting decided, that we will change currency in the group and in the parent company next year. So we will, during next year, present our numbers in euros instead of in SEK. So that's good for you to know. If we then take a deep dive into the 3 business units, and let's start with Bridges and Culverts. Bridges and Culverts is approximately 34% of the group sales on a rolling 12-month basis. And in the third quarter, we had an organic growth in sales of 5.2% in this business unit, and a nice and strong order intake of 18.7% organically in the third quarter. You can see that the underlying EBITDA is slightly below last year, and this is very much caused by the delays in the customers financing of their infrastructure projects. So that is what is mainly impacting us in Bridges and Culverts. If we move over to our second business unit, Geotechnical Solutions, that's approximately 50% of our group sales on a rolling 12-month basis. We had a negative organic growth in the quarter, -2.3%. And here we can see that the macroeconomic disturbances has impacted our restructuring of our plastic pipe production. During the quarter, we did complete the restructuring of the factory in Lithuania, and the production now, as in the end of the third quarter, is up and running. But this delay has impacted the volumes and the profitability in the business unit, and also impacted the mix of sales between the different product groups to a less favorable mix for us. And if we look at the third business unit, which is Stormwater Solutions, that's 16% of our group sales. We had a very strong organic growth in sales, 25% in the quarter, and also a very strong order intake. Organically, the order intake was 43% organically growth compared to same period last year, which is of course a very nice number to have when we move into the fourth quarter of this year and the first quarter of next year. Looking at the underlying EBITDA, it's a slight increase in this business unit. And however, we can also see in this business unit that we have delays from our customers, mainly the private customers, and that is impacting our profitability in this business unit. We do want to grow this business unit quite strongly, and we are prepared to do that, and that has some implications on the fixed cost base. And when we don't see the same volumes and we have delays in the volumes, that impacts our margins, of course. Then some words around our cash flow. Very strong cash flow in the third quarter. The cash flow from the operating activities was almost 125 million SEK, which is clearly above last year. The main driver here is the positive change in net working capital. We've had a lot of focus on that this year, and we now can really see the effect from it. During the quarter, we have invested roughly 30 million in the business. And if we look at our financial position end of the third quarter, we had a net debt of 1,127 almost SEK. But if you exclude the effect from IFRS 16 and the leases on this, the net debt was just above 1 billion SEK end of third quarter. Our cash and cash equivalents was also increased compared to last year, and the position was 233.6 million ending the third quarter. I think I stop there and leave it back to you, Stefan.
Thank you, Philip. So let's talk a little bit about our focus right now and onwards. We are, of course, working with continuing to stabilize our customer deliveries and also to stabilize our production disturbances. And we see a positive trend in both those aspects so far. But we need, of course, also to prepare should the markets next year be a little bit more rocky. Although we don't think so, but we should be ready. And therefore, we are working with securing internal flexibility to manage any potential short-term and disturbances and a little bit of a rocky ride. We're also, of course, continuing our growth path and targeting the alternative materials, concrete and plastics, which is the main competition. And by emphasizing, of course, our strong sustainability contribution to the markets and to the customers and, of course, to the environment. Of course, also continuing the integration of the recent acquisitions that we have done to thereby also further grow our sales in Western Europe. And continuing the journey we started already during 2021 of optimizing our industrial system, thereby securing good productivity gains into Q4 and into 2023. Before we go over to the Q&A, I just want to highlight a recent initiative that we have decided to join. It is called the Steel Zero initiative. And we do this to, of course, support our strong sustainability agenda. The purpose of this steel initiative is to increase and work with the demand for net zero steel. Net zero, of course, meaning CO2 emissions. And by joining this initiative, we have made a commitment to transition to 100% net zero steel by 2050. and by 2030, 50% of our steel should be zero. And this must then meet specific scientific-based CO2 reduction conditions, so that we can contribute in the very right way. And we're very happy to do this, and it feels very natural for us to be part of such an initiative. Good. I think thereby we are finished with a formal presentation, and we have some 10 plus minutes left for any Q&A.
Thank you, both of you, for the presentation. Yes, we have had some questions incoming for you. You mentioned the impact of that higher inflation caused delays in financing customer projects. How do the company prepare for this problem to continue, or are you certain already that effects will decrease?
We have already seen that those effects have stabilized, and we are able to push more deliveries to our customers. However, there are still risks in this matter. It is not a lot we can do more than being flexible with our customers and serve them as good as we can during this period. Especially when it comes to the infrastructure projects, which is a big piece of the delayed deliveries. We are quite certain that the investments will continue in Europe into 2023 also. And as I said earlier, this is a classical area for any government to invest to stimulate the economies in worse days. And we saw effects of this already during the pandemic 2 years ago, and actually partly also last year. So we're doing what we can, and of course we are also preparing internally with our flexibility to be able to stay at a reasonable good, or minimize, I should say, the financial impacts of this. So the internal flexibility is quite an important piece in this as well. And we are working with that.
Yeah, thank you. How about costs then? The increase of costs in general, how easy or hard is it for the company to put the effects from them costs increases over to clients?
We have been having a very good track record already during 2021, when we could see a big increase in raw materials, for instance. And this has continued with further raw material cost increases in 2022, which are now, or have been, I should say, this year at a record high level. And they are now coming down. So these pieces we are able to push over to our customers. And also the inflationary parts of other items, we have been fairly successful in pushing this over as well. So pricing and pricing coverage of fixed costs and other costs, we have managed quite well so far.
Are there any differences on how well you do this depending on which regions, or is it the same overall?
I would say it's fairly even across all the 20 markets where we are present. We are selling in much more markets than 20 in Europe, but overall we are quite successful with this.
What is the impact on higher electricity costs if we talk about that separately? How much electricity do you consume, and how is it priced at the moment?
I don't know the total megawatt hours that we buy heart. I would have to come back to that. But it does impact us, but not across all our business units. It varies between the products that we produce. And typically the plastic pipe production in business unit Geotechnical Solutions has a higher share of energy cost in its production than the other products. And so far we have been able to also move these costs over to the customers.
there is one question from a viewer also about the continued non-recurring items in 2023. Is that expected to be the same as in 2022?
No, we are planning for this to come down significantly during 2023 compared to 2022. The reason for those costs are varying. One of them being that we've been running several M&A tracks, and that causes non-recurring costs. Given the current situation, we have put our M&A agenda partly on hold. We hope to be able to resume this during next year, and also by preparing and developing the company for a profitable growth and working with our productivity gains in production in our industrial system, for instance. We've had the need for some consultancy support from the outside, but we are now able to stand more on our own feet. So this amount will come down significantly during next year compared to this year, unless we are able to restart our M&A agenda. Then there can be some more cost than what we are planning for 2023. We don't expect it to be higher than 2022.
Last question then.
So sorry, can I just
Yeah, sure.
add something there, Fredrik? Also this year, the divestment of Belarus has also caused non-recurring costs for us. We don't intend to divest more parts of Viacon going forward.
Yeah. Thank you. The last question then is, is it possible for the company today to do business in Ukraine?
No, and we have not done any business in Ukraine this year at all, and also not in Russia, for other reasons, of course. And we are not doing that. No, it is not big markets for us. We have been able to compensate for these losses in other markets instead.
Do you see can you foresee that there will be a infrastructure build-up in Ukraine in coming years that you can participate on?
Yeah, well, when the war is over, for sure, there will be a need. And our solutions are well adapted for a quick recovery and reparation of broken down infrastructure elements. So when the war one time is over, our solutions are good for this. We don't intend to start any businesses there and so on. We don't have any plans like this, but there are representatives we can work with to sell our solutions into Ukraine, which we have done in previous years.
Thank you. And by that, we are finishing up this presentation from Viacon. Thank you, both of you guys.
Thank you very much.
Thanks.